Welcome back to another episode of Beyond the Numbers. It's hard to believe this is episode number 5, and really excited today for our guest, Armine. It's going to be a little bit of shop talk, but there's going to be a really nice balance between how we think about finance from our different lenses. And before we get started, just really wanted to give a big shout out to and thank the team at Riveting. Jessie and her amazing crew have been nothing but instrumental in going ahead and helping make this show look seamless, and can't recommend them enough for anyone who's exploring a new voyage into social media, personal brand building. And one of the other things I just wanted to put out there is you take a look at my content of late. I've been really focused on using an operator lens as well as a finance lens, and really thinking about what companies need to do in order to move forward in this new era of financing, which is more and more challenging. And that really comes down to going ahead and thinking about it from a little bit more from a unit economics lens, and really just asking a simple question of, if I were to take an investment from an investor, could I go ahead and make that dollar of investment be closer to $1.50 in return? Because the age of revenue at all cost is definitely behind us. We're in a much higher interest rate environment. And now as founders, we need to be much more thoughtful about how we go ahead and not only bring in capital, but how we deploy that capital to be able to go ahead and generate the maximum amount of return, to be able to go ahead and extend runway as much as possible. And with that, I want to go ahead and introduce our guest today. She's going to go ahead and tell you about all of her amazing background and what she's working on. And with that, Armine, welcome to the show.
Thank you, Bill. Thanks for having me. So I'm Armine Alajian, CPA, California CPA. I'm the founder of Alajian Group, providing accounting, finance services and tax to startups for the last 9 years. And I've been in the startup industry world for 13 years now. And before that, accounting, public, private, business management. So I've been doing accounting my entire life pretty much. And I like it.
No, that's great, because there aren't enough accountants out there these days. There's a growing shortage. I mean, I know every time someone reaches out to me and is looking for accounting help, it always starts with, can I get a good controller, and how much do I have to pay up to have that controller join me? At least in the Seattle market, it is probably one of the most hardest jobs to be able to.
I like to hear that, because when people think of accounting, they automatically think of tax.
Yes.
Only tax. It's not the other end. So I like to hear that people are reaching out for controller type financial accounting.
Yes. Yep, exactly. And with that, let's jump into like that first topic, because I think there's a lot of meaty things that you and I both have a lot of experience in. That's going to be really about how finance and accounting can build that clear view of the business. And full disclosure, I am not a CPA, but I work with a lot of very smart accounting and controllership roles. And a lot of times I pick up the ball and build what I like to call a 36-month forward view based on the accounting actuals. And for your mind, like as you start to think about like building that clear view of the business, like what are the must-haves that must be in place?
Right. Accounting is must-have, period. It's the infrastructure, right? It's the bones of everything. So you have to have the infrastructures, you have to have the setup, the system, and you have to operate it. It's not nice to have. A lot of people think of it as like, oh, my bank has the information, I don't need it. Or I just got QuickBooks, it gives me everything. Or my favorite, when people just look at their revenue, we have to look at the whole cycle. Oh, I have Shopify. Here are my numbers. Here are my clients. That's amazing. But we have to put it all together in an accounting system to tell us what the business looks like, from revenue, direct expenses, operating expenses, everything. And when you have that ready, we can make projections, right, with the actual data, and then track actual versus projections. And it's constant. You constantly have to have it. It's not a one-time thing where you build it and you put it away. It's a live infrastructure that And things change, so you have to be on top of it to constantly update it.
No, I couldn't agree more. And when you start to think about like the tech stack, it's almost overwhelming these days. And especially when you're coming up in that startup phase, you're like, do I use Gusto? Do I actually jump all the way to a Rippling or JustWorks and go full blown
Hmm. Hmm.
EO? And even just picking your general ledger these days, because
Hmm.
there's a lot of sort of mid market products that I like to think of that are coming in, things like Riplet. And, they're trying to go ahead and kind of carve out a space themselves. So, what would you say is sort of that minimum stack that any good startup needs to have to lay that foundation?
Right, there's a lot, and when you're not in it, the commercials and the tools, you're like, "Oh, I think I need this." But to start the basics, QuickBooks, you could start low, small, and then grow into it. So I like QuickBooks, but QuickBook personally, I like Gusto too. Gusto's for payroll, Rippling's for payroll, which you might not need right now, but QuickBooks is your base. Let's start with QuickBooks. If you prefer Zero or Sage, I'm a QuickBooks shop, so I go to QuickBooks, especially right now. They have so many tools that integrate. So let's start with QuickBooks. If you're selling e-commerce, Shopify. Let's have the sales tax platforms. Let's have the revenue recognition platforms, payroll, reporting. All of that could sink into QuickBooks.
I love how you're thinking about that holistically and the way you had opened with
Yes.
looking at the business holistically. And I was sort of laughing and crying at the same time when you're like, everyone wants to look at revenue. I'm like, yeah, revenue's great, but how do you know you're not over hiring? How do you know you're not going to spend through that revenue curve? And then, oh, by the way, there's this nasty thing called cost of goods sold, which immediately takes the wind, out of your sales. And that is, for me, one of the things that I like to coach new founders on and leadership teams on is looking at that big picture. And it's not this linear A to B to C. It's more like, what is A to Q back to D and then down to P, because your business isn't going to move in a linear fashion. And you have to be ready to go ahead and jump in and be able to triage and figure out where you're having those problems along the way. And when you start to think about like the SaaS companies that you work with, like what's that typical sort of ARR range that they're experiencing right now?
Well, cash is king, right? We look at the financial statements, the proper your P&L, your balance sheet, but you also have to track your cash. So that's a completely separate reporting where it's just pure cash in and out, and we need to know how long will this cash last.
Correct.
So we always have to look at it. Yes, we're having all this revenue, but what about the merchant fees? What about interest expense, right? There's so many big, like cost of goods sold or advertising. There's so many other things that drain your cash. And if we projected, we say, okay, I have this much cash now. How long will that last? What's my revenue like? Then we could set some projection, something to kind of give us a base and then track it every week if you need to, at least every month. If
Oh,
you're cash tight, weekly.
yeah, I'm a big fan of the 13-week cash flow schedule. And it's the way I do it sometimes is, I don't want to say ridiculously simple, but it actually is a great way just to go ahead and get in, get out, and keep a really good barometer. It's where you would just list your big inflows and outflows on an Excel
Like the basics, right? Like
spreadsheet.
your check register,
Yep.
in and
And then
out.
across the top, you've got the weeks, and you can just then start to plot. I'm like, oh, I know I'm going to drop payroll here. And then you can
Hmm.
really just kind of like a roll forward schedule, build out.
Right. That's my favorite because P&L and balance sheet, it's proper. It's gap accounting. There's depreciation. There's this, but what does cash look like?
Exactly. And yes, I've written many a post on LinkedIn about cash being king. And I think sometimes people don't quite delineate enough between cash and gap. And it's like, you just bought a subscription to QuickBooks, for example, and you paid it all up front. You're like, okay,
Hmm.
cash is going to take the full hit, but then I get to see that on a 1/12 basis in my P&L. So you're thinking, oh, I've got plenty of running room. And you're like, that's where so many folks, I think, can get upside down when it comes to managing their business. And one of the other things that you talked about was, sales tax. I think that's one of the more overlooked things that most
Hmm.
startups,
Yes, that is.
and it's easy to get upside down pretty quick in that. And, at least, here in Seattle, there's Avalara that started here, but there's some other interesting players in this space. And like I said, especially if you're working in that e-com space, definitely use that API, connect it to, the Stripes, the Shopifys of the world to be able to go ahead and take that burden off you sooner.
Absolutely. It's so easy to set up a Shopify account, but then there's so many other things like sales tax where you might or you might not need to charge. So it's good to have these Avalara Taxure type of softwares where you connect and they do a nexus study, and based on your sales, it's live. You'll know what states you're responsible to pay sales tax, what states you're not. And then if you sell on Amazon or eBay, they do their own, which is so much helpful. But again, it's that infrastructure, that holistic, that connection needs to be there, and then that all needs to go back to QuickBooks. So there's so many moving parts, and they all just need to flawlessly work together to see what your business and what all of your accounting looks like. You can't look at it just piece by piece.
Exactly. And, doing that technical piece that, you and I have seen year in, year out, month in, month out. How do you go ahead and roll up those numbers and talk to founders and leadership teams about that? Do you have any tips or tricks that work best for maybe telling someone who's not necessarily numerate about financials?
It is a little challenging because when you're so technical, you're so in it, you just approach like, well, this is what it looks like. So I think it's important to talk to every client or anyone that, like, you hold their hand, explain to them, make sure they understand, make sure it aligns with like their true understanding of the business or the numbers. It's going to take a few times, right? Because then the numbers change, then you're like, well, what happened? This is what I thought. Oh, but then there's this. So that communication is very important.
Exactly. And especially as we enter year end and, you're trying
Oh,
to
taxes,
and
regular taxes.
you're trying to bring in, the right level of expenses. You're trying to be super diligent to make sure you don't have things that will blow you up in 2026. And, this is where it becomes, much more of an art form than a necessary science, especially in December, and setting that expectation, especially now we've got things like bonus depreciation. And, how can you go ahead and optimize what the current tax code is allowing you to take?
Right. I love that you said that it is art. It's not all technical. In your head, it's technical, but it is art. You have to kind of step away and draw everything out, then come back to it. How does this work? How does that work? Then you go back to the client. You tell them, well, this is what it looks like. Then they get creative too, right? It's their business. They really know what they could do, what it looks like. Then they come back to you. So it's this, you're doing this little dance with the client. And then I do like have those clients that do prepare in December or in November, where it's not the year's over. What do my taxes look like? It's too late. The year's old. We had to plan it throughout the year.
Exactly. Yes. There's so many little nuances that, I think you have to be sort of bitten or have that harsh reality come to you, a few times before then you get that, oh yeah, type of mindset of things that you need to do before. Uh,
Right. And with taxes, it's not just tax. A lot of people, oh, it's tax preparation. My accountant is bad because they told me I owe this much, but you have to work with them throughout the year. There's tax planning, there's tax strategy. It's not just the preparation. A lot of people just prepare their taxes and that's it.
yes, exactly. And, let's actually move into the second topic because there's, I think, a lot of really good conversations that we can springboard from what we just covered. And this whole notion of balancing that momentum with control. And, a lot of times founders sort of find themselves in that really kind of special period where you feel like almost like a in a go-kart and like you're just going downhill and that you can easily oversteer and just roll. So there's always that notion of like, how do I balance that momentum with control? And so for me, from a lot of that forward-looking lens that I use, a lot of it comes down to the idea of what KPIs am I using to go ahead and manage the business. A lot of like what has to be true. Like, when do I hire that next salesperson? Because it's easy to feel like you've got the wind at your back and you want to continue to maybe put some more gas on the fire, but it's really easy to overspend through that. So like, how do you think about control when businesses are in that sort of fast water?
That's when projections come in. That's when I love to work with an FP&A specialist to do projections. So we do projections. What would it look like if I hire one more person? What would it look like if I raised my prices or lowered something? So you play with those numbers. And then based on that, you're like, okay, let's try it. And then next month or next quarter, yes, it's going along with our plan, or it's not, then you could adjust it. So definitely it takes a village. It's a team. You have your tax accountant, you have your financial accountant, you have your FP&A specialist, everyone working together to come up with those numbers. Like you have, private public companies, they have a whole team of consultants. They have so many people working and playing around with those numbers. It's not just like, oh, I'm going to hire one more person. What does it look like? So you have to look for projections, budgets, all of that.
No, I completely agree. And there is a lot of iterative planning. And, it's not uncommon, I think, for folks like you and I to get that call at, 2, 3 o'clock on a Friday afternoon. Hey, what would happen if we saw a 30% change in, our annual recurring revenue? Or what happens if churn spikes because of this? And it's that ability to be able to go ahead and turn that in a pretty effective manner. And I always look back at, some of my mentors and people that were most influential in my career. And those conversations weren't measured in days. They were often measured in hours. And
Hours.
I used to play this game with one of my favorite CFOs, and he would give me this huge laundry list of things. And I'm like, I'll have that for you in 3 days. And he's like, no, you have 3 hours. And it's like, especially now with the speed in which businesses need to move and adapt. And if you're in like an e-commerce space, like you're trying to go ahead and reach that customer at the moment they're ready to go ahead and buy. And you don't often have that second chance to be able to go ahead and bring them in. So that's where those notions of control become just super important. So you want to be able to give the business some running room, but at the same time, you don't want to give them too much running room that they end up hanging themselves.
And it comes back to the infrastructure. If you have the infrastructure, if you have the system, it's operating, right? It's live-ish, so it's there. When that does come up, you already have the base there where you could give a educated estimate what it would look like, until we do take a day or two to really dive in and fix that. And with all the tools right now, there's so many tools and AI that helps you solve that quicker.
Mm-hmm. Yes. Do you find yourself using the word directionally correct a lot?
I will.
That's one of my favorite phrases. It's like, I'm like a weatherman. I don't have to be like telling you exactly how hot it is. I'm like, yeah, am I going to really get that much blowback for, being 1 or 2 degrees off in temperature? So for me, a lot of those types of conversations are, directionally, this is where we're heading, given.
Right. And given you have the clear numbers and the data, sometimes you meet someone, they just give their, oh, this is what it looks like. What would it look? Well, hold on. We have to first clean what it looks like. We can't just vouch when no accounting has been done, just the P&L in Excel. We can't vouch for that. We have to really reconcile, clean everything, and then we could.
Yep. And you touched on something really interesting that I know it's on a lot of minds of finance and accounting people. It's the role of AI. And, there's a lot of information. It's almost overwhelming at times. And some of my experience using AI tools, like, is it me, or do you find that, certain AI tools are not really great at basic math? And like, you just have to stop and be like, this is just 1 + 1. Like, have you ever experienced that type of hallucination?
I have, and that's why it's good for every professional to use their AI tools and not just, oh, you don't need accounting, you could do it by yourself. Because then as the professional, you the kind of output it should give you, like 1 + 1 = 2. So you're like, okay, I catch it. Sometimes it could be a little too much. You're like, let's just keep it to great. You're great AI, just keep it to the basics. And then sometimes it's just a really great tool where it makes your work faster. It's like before we used to do everything in ledgers, then we got a calculator, then we have Excel. So this is just another tool for us to use.
No, exactly. And it's funny, I was reading a post this morning about someone was actually flashing their old school HP 12C calculator.
Uh-huh.
And, that was like, you always had that in your pocket because you could do like net present value, you could do bond rates, you could do, and it took a little bit of work to like get the sequencing right. But like once you had that, you could go ahead and just rip through some stuff. But, that was the original version of the truth. And now, actually, I still keep mine on my desk more so as a reminder that we're evolving from not just calculating numbers, but being able to move into that more guided and trusted leadership role. And that's, I think, more of the evolving role of finance, especially in the age of AI, is like, let the AI do a lot of that heavy lifting, like variance analysis, for example. You should be able to go ahead and do, month on month or budget versus actual variance analysis. I mean, that is traditionally A minus B. And then it's putting that effort into what is the commentary? What are the drivers? Because, for people like you and I, anyone can subtract two numbers, but I need to be able to tell you why those numbers are moving in a positive or negative manner.
Correct. And then you see the patterns, you see the trends, and these are great tools for us to use. But if you're, as the founder, you could also, right, you could put in your data into ChatGPT. It'll tell you some stuff. It'll tell you what you want to hear. I'm a ChatGPT user. I like AI, but maybe you as the founder could take that information, go back to your accountant. Hey, this is what I got. Mm-hmm. Does this make sense? Then again, you work together. It's a team. It's not me versus you. We all have to work together.
Yes. And I think that's really where the greatest opportunity for finance to weigh in going forward is going to be, is that how do we go ahead and work together to be able to go ahead and make the business move at a faster point and not be overly reliant on tasks that you and I used to do just because we had to, like variance analysis, like going ahead and trying to be able to, grind through journal entries. And this is that sort of new era. Like one of my favorite books that I always recommend for founders is called Buy Back Your Time by Dan Martell. And for me, it's a great way to help frame the notion of, think about how much your time is worth on an hourly rate. And if you have a task that costs less than that rate, go ahead and pay for it to be able to go ahead and have someone take that off your plate. It's going to allow you to continue to focus on what's more important and be able to go ahead and drive the most amount of value within the org, as opposed to, getting bogged down in day-to-day grind.
Right. Absolutely. I totally agree with that. Because like you're saying, you're not doing A minus B. You already have that data in front of you, so you could make better decisions. You could advise instead of spending all your time doing the calculations.
Exactly. And yeah, you definitely touched on one of the big things is like pattern recognition, understanding that bigger flow in the business. Like one analogy that I always like to talk about is, if you look at the business holistically and say your marketing pipeline is slowing down, intuitively for people like you and I, we know it's going to come back and bite us in the ass someplace. The question is, how do you get in front of that sooner versus later? What are you not going to be able to do, or what are you going to have to reprioritize as a byproduct of knowing this is coming down? Because it's going to work through sales. It's going to go ahead and slow down your cash. You may be able to pick up some OpEx on the back end, but there's kind of a mental checklist that you have to go through. And that's one of the things where AI isn't quite to that point where it's going to give you that extrapolated view, but it's enough to be able to go ahead and as much be a thought partner about how to go ahead and get there.
Right. And you as the accountant, you're the messenger. So you communicate that with the founder, and they're the brains, right? They're the magicians of they know their business. So then they could think about, okay, what can I do, or what should I do to bring sales or lower expenses? It just comes back to them because they're the magicians within their business.
Yep, exactly. And yeah, Michael actually just asked a really good question in the chat. It's like, what sorts of edge have you received using AI?
So I use, a lot of AI. What I use, I'm like, is this AI or is just a glorified spreadsheet with AI? I'm still in the middle of like, what's real AI in my world?
Mm-hmm.
So I use tax research AI, right? It's like, great. It gives me all this research instead of me taking all these books and reading the tax code. It tells me this information. Is that AI, or it's just a database that just brought everything in one place, and that could take my question and answer it in a real simple matter?
Mm-hmm. Exactly. It's like a great research assistant. And so when I think about that question, so for me, when I think about like the edge, I often think about it as someone to be a thought partner, to be able to go ahead and surface perspectives that I hadn't thought about. So, especially if you were to go ahead and I'm going to use your term of like being the messenger, you're like, what are the first 5 questions that this founder is going to think of once they see this data? And then what are the next 5 action steps that we can do? And sometimes it's also nice to play almost like good cop, bad cop. You're presenting to a board of directors that is, fill in the persona that you want, and it'll actually go ahead and help you work through some of those challenging questions. It'll actually go ahead and actually help sharpen the acumen that you want to go ahead and deliver. So for me, that's the edge that I often think about right now, and the opportunity to go ahead and, as I said, just get that perspective to be able to go ahead and bring either new facts to life or be able to go ahead and think more creatively.
That's a very good point, right? You get to see what does that person, what questions would that person, because every person's different, every industry is different, every founder is different. So you're coming as the accountant, and then you're like, okay, let me use AI to help me. What would Bob, how does Bob from that just created this pen industry thinks about accounting, or what questions would he ask?
Yep, exactly. And as I said, this is going to go by super fast. It's hard to believe we're probably in the last 15 minutes or so of the show. So with that, let's go ahead and jump over to topic number 3, and that's the external factors. I mean, there's a lot of things that we can see and we can control within the business. We can help influence spend. We can help influence headcount. And to a large degree, finance can also help influence the way revenue is flowing into the business and making it efficient. But there's all these things that are often like outside of our control, whether it be tax, tariff, which is on a lot of people's minds these days. And, what are some of the things that you use to be able to go ahead and prepare for external events, or how do you sort of factor that into the rubric of your thinking?
Well, there's a lot of things you can control, right? Interest rates, market, COVID type of instances. So there's a contingency plan. A lot of bigger companies have a contingency plan if this happens. I gotta say, a lot of the time, people are not ready. They have a little like, what if? It comes back to your cash flow, like, what if we run out of cash? But we should take in a percentage of this what ifs, just like your savings account.
Yep. No, that's actually a really good point, is that the external factors are as big as the envelope that you want to go ahead and start to build.
As much as you could do. You could project.
Yep. And, you'll have those sort of moments like COVID that took, more of the nation by by storm and was able to create a pretty long-lasting ripple in the way many companies operated. And the way in which you start to think about those internal factors, like for me, it's going to come back to cash and cash optimization. What external factors can I go ahead and think about in my business that will go ahead and have an adverse effect on cash, whether it be taxes, tariffs, supply chain? And especially if you're in an e-com space, to a large degree, you're trying to figure out how to source products from one region and be able to deliver those to another. And managing supply chain can be incredibly challenging.
Right. You just have to plan as much as you can. Nothing is certain, because if it was perfect, no company would ever have layoffs. There wouldn't be downsizing. There wouldn't be things like that. But even with those bigger companies with all their resources, they still have layoffs. They still have issues. So if you could plan, you won't react as maybe those layoffs are planned, right? You just have to plan as much as you can plan.
Yes. And
with the information that you have at that time and the projection that you have. That's why it's constant, right?
Mm-hmm. Exactly. And that comes back to that line that I mentioned before about being directionally correct. I'm directionally correct based on the set of assumptions that I'm allowing into this scenario. And then it really comes down to, especially now with the economy being, a little bit tenuous at times, the Dow's been up. We've seen some mixed earnings. Words like credit default swap are coming back into the lexicon of a lot of companies, especially now when you look at like Oracle and the amount of investment they're making in AI. And really have to kind of start to extrapolate what that means. And that's, for me, a lot of times building that secondary plan and being able to go ahead and have a really crisp set of outcomes that you're going to be able to go ahead and move forward. So it's almost like this notion of like, for every change in X, I need to do Y. And how do I go ahead and as much help prepare leadership for these types of changes and being able to help them navigate turmoil? I think that's, one of the things that I know I've seen is that, all roads lead through finance, whether someone's paying me, I'm paying someone else, and being able to be at times sort of that eyes and ears, to be able to have that single version of the truth, to be able to go ahead and help leaders navigate. So in addition to the technical knowledge that, we have, the ongoing CPA, continuing ed credits that you have to continue to maintain,
right? There's
a whole notion of, how do I become a storyteller? How do I become a navigator of change? And like, have you ever been in an experience where you've had to go ahead and, help a company navigate through rough change? And were there any things that you learned coming out of it?
Yes, I have. And also, to add to what you're saying, you just, with things like that, you extend your team, you extend your partnerships. We engage with subject matter experts, right? In a field that you're in, that could that do all this research, that could help you more than your initial team, right? So you expand to get more information. It's all about data. The more data you get. And with a lot of startups, it's always a fire drill. So like, you're faced with these frequently, like, oh my God, where's our cash? What do we do with cash? What do we have to do to get cash? Oh, this deal didn't come through. Oh, it's constant.
It's true. And one of the things that I like to tell folks, especially here in Q4 with just a remarkably few number of selling days left, is that if you think about a SaaS business model, it's very much like a cash flow model. And your job is to optimize that cash flow. So right now, if you're expecting bookings to land in Q4 and you miss those bookings, you've just now pushed your ability to spend that cash out, say 36 months, because that's really that life of a customer that you would have assumed that you would have acquired. So every day you're now thinking,
waterfall.
How do I go ahead and reset expectations on that 36-month cash flow?
Right. It's that waterfall. So then some AP gets delayed, unfortunately. But that happens with bigger companies too, especially with the production startups or the big production, your NBCs and stuff, they don't pay on time, but then you have to find financing. So then the debt comes in, equity comes in. So you're always trying to get more cash to put in a band-aid until you do get paid.
Yes, you hit on something that I think a lot of founders don't necessarily bring into like that full 360 approach is, you can be so excited to do a deal, like you said, with an NBC, a Johnson and Johnson, and it's a great marquee logo and it's a great way to go ahead and build traction. But, do know that you're probably going to be, 45, 60 days,
They pay when they pay.
and you're on the
And
phone.
they control you. You're just like, I'll take what I could get.
Yes. Yeah. And how many times have we been on the phone, trying to hunt down an AP clerk or trying to find, that signature that's going to go ahead and release payment. But to your point, that's really where you still have to be super creative. And you're like, okay, do I start delaying my own payables to be able to go ahead and match my receivables and try to get to a net cash zero? Or do I have to go ahead and figure out how to do some type of factoring where I'm selling those accounts?
Sometimes both. I think sometimes both, because it's that timing until you get this deal, until you get the factoring deal, or until you pay someone. So it's just constant gymnastics around cash.
Yes, exactly. The metaphor that just sort of popped into my head was this notion of like when you're learning how to drive a car with like a manual transmission. So you've kind of got like your left foot on the clutch and then your right foot on the gas, and then you're trying to sequence that. And you're like, one's payables, one's receivables, and you're like, okay, like if not, I'm just going to hit stall. And
But every company does that. That's just like business, because every company does that, right? They're not getting paid on time, so that means they have to delay their AP until this one gets paid. So, and you don't know what the other company's goals are. You could only control what you know about your company.
Exactly. And so many young students that I mentor, they read that in maybe like a college accounting textbook, and they think that it's all very simple, sort of like being at like at the craps table, the dealer's going to walk away and they're just going to go like this and it all comes together. But it's like, no, there's an actual transaction where you can't close the books on December 31st and be ready to roll on January 1st, because there's just so much flux. And being able to go ahead and bring in a lot of those hard truths, I think, to either recent college grads or people who are young in their career, I think that's like, there's so much of a wake-up call that I think could happen for folks if they maybe had internships or more hands-on training, so that you come in a little bit more eyes wide open, that it's not just textbook.
Right. And startups are so different because you get to see everything. You get to see those fire drills. You get to see, oh, this investor didn't pay. Oh, this one didn't come in. But textbook, it teaches you bigger or private public companies where you're just doing your AP or you're just doing this. You don't get to see the whole picture.
Mm-hmm.
So then I think it's also challenging when people come from those bigger companies to startups. They're like, oh, what do you mean? I have to do it? Oh, what? We don't have cash? We didn't get the funding on time? What do you mean? The book told me I have, everything comes in. Mm-hmm. They didn't pay net 15?
Exactly. Oh, net 15. It's like a high school, quiz all over again. But you hit it now, right?
Suggestion.
No, because there's this whole notion of going from large company to startup. And that's actually how I started my career. I was in, large scale financial organizations like the Morgan Stanleys of the world, the Vanguards of the world. And then of the past 10 years, definitely fallen in love with startup life, but there's so much that you feel so isolated from when you're in those large organizations. And I have friends who are at like Microsoft and Amazon and Google here in Seattle, and they never see the revenue side of the business, or they're very talented expense optimizers, and they'll run $100+ million P&L, but only the OpEx component. And
it's very structured too.
Oh yes, yep. And coming into an organization where you now need to source your own data, clean your own data, and then push that through, I think is that true wake-up call that makes you so much more disciplined that you were talking about of working in a startup. And you very quickly realize that it's not going to be accounting theory, and it's going to be a lot more that practical, almost like feeling your way in the dark at times.
Correct. Your brain never shuts down. It's not a 9 to 5. It's not like, oh, I'm not thinking about, no, it's constant. It's constant because you're thinking too for your clients. You're like, okay, what else can they do? You're not just like providing the numbers. You really care. I do. So you start to think what else they could do, or what if this doesn't happen, or this doesn't, you're just constantly planning.
It's true. And one of the things that I do to try to go ahead and find some degree of balance is I'll get out and go hiking and like bring my camera and try to go ahead and pick up a new perspective. But I'll tell you, like, I've had some of my best inspirational moments when I'm just out on the hiking trail and, it's quiet, or you're trying to go ahead and find maybe that perfect picture. And all of a sudden you're like, oh, and it just jumps into your head. But you're so true that it's not something you can kind of turn off like a switch, and it will come to you at sometimes the most bizarre times. And, but when it comes together, it all comes together so well. And I know we're almost out of time. So I've really enjoyed this conversation. So
likewise, and there's so much more to talk.
So much more. How can people find you on LinkedIn, Instagram?
Absolutely. They can find me on LinkedIn, Armine Alajian. That's my page. They can find me on my website, Alajian Group, and all the social media sites, Alajian Group. I could be reachable through any of them.
Great. And as we're in probably the last, say, 8 business days, 10 business days of the year, any words of advice for founders or leadership teams?
Tax planning, just look at your taxes. You have a few more days to make decisions, just to know, what that looks like. And definitely have an infrastructure. January starting up. Don't just depend on your book. We don't want Excel. We want a proper infrastructure. Yeah. Don't put that, when I get this. No, start now.
Exactly. Yeah, there is no better time to start than now. And
be ready. An investor can come in any minute. At least you'll say, look, I have financials.
Oh, yes. Yeah, we could easily talk another 40 minutes about preparing for the investor and what does an investor really want to see and how to lead an effective due diligence, or even surviving your first audit.
Yeah, that's another topic.
How to work with external auditors to be able to go ahead and make it clean and painless.
Mm-hmm.
Yeah. All right. With that, I'm going to go ahead and close the show, but really enjoyed our conversation and look forward to hearing more about all your tips and tricks on LinkedIn.
Thank you. Thank you so much. I'll share as much as I can.
All right. And with that, I'm going to go ahead and get ready to close episode number 5. And it's been an amazing journey as I think back about, all of the guests that I've been able to go ahead and meet. My very first guest, Chris Sherrick, just a really dynamic leader doing some innovative stuff in the hearing aid space and hearing management. Definitely check out what he's working on, and also continue to go ahead and follow me on LinkedIn, YouTube, Instagram. I post nearly every day. I've got a really great article dropping tomorrow. It's another episode of Operator Plays in Action, and it really lays out how companies can go ahead and cut through the noise. It actually parallels a situation where I was working with a leadership team where I would say the numbers were green, but the mood in the room was very red. And at times, meetings felt like a full contact sport. And it was that, unfortunately, stereotype, sales didn't trust marketing, product felt like it was under immense pressure, and, finance was being asked constantly to reset the numbers. And the process that I lay out actually talks about how to be able to go ahead and unravel that and bring teams back together to be able to go ahead and move forward. And with that, Thank you so much. Look forward to seeing you all on the next episode of Beyond the Numbers. Thank you very much and have a wonderful day.